What's up guys, it's Chris here, and I need to warn you right now about what is going to be coming in 2024 for the markets and the roller coaster ride we are all going to find ourselves on in the months to come. The markets will be going up and down and probably all over the place, and it's enough to make even the most seasoned investor question their investing plan. But in today's video, I'll take you through 7 simple things that you can learn and do to make sure that you can make it out of 2024 with your investment portfolio intact and hopefully in a position to make some gains and continue to build wealth for yourself. Let's get started. So why exactly is this year going to be turbulent for the markets? Well, there are essentially 4 reasons. And the first and probably most impactful is that there is over 70 elections all around the world this year, including some of the largest and most influential economies in the world. And as much as I know there are people who try and steer clear of politics, unfortunately the markets aren't one of them. As far as history goes back, the markets will shift and move based on what presidential candidates announce in their campaigns. Certain leaders are more business friendly and others the opposite. If a presidential candidate announces they will wage war against the big corporations, taxing them more in order to spread the wealth, regardless whether that's the right thing or the wrong thing, the market might decline because more tax means less profits. Or if a prime minister hopeful runs on reducing taxes for the people, then markets might rise on the expectation that more money means buying more products. In the UK, when Prime Minister Liz Truss announced a series of tax changes and spending that spooked analysts and sent markets tumbling. Or recently when her successor Rishi Sunak posted the biggest budget surplus in 30 years, the market rallied thinking it could mean tax cuts for his re-election campaign this year. Then there is the anticipated or dreaded rematch with Biden and Trump in a few months. India, one of the largest economies, will also have elections, so you can expect that with elections there is uncertainty, and where there is uncertainty there is also market volatility. The second hazard is inflation and interest rates. Whether countries meet or miss inflation predictions can affect whether rates will go down this year or not. If inflation rises or even falls slower than expected, that's bad for markets. The opposite will be good for markets. Also, whether central banks lower interest rates or not, and by how much, will make a huge impact on share prices. The ebb and flow of these decisions could mean the difference between green and red in your portfolio. The third bump in the road is geopolitical tensions, and of course I'm referring to the war between Russia and Ukraine, as well as the wars in the Middle East, or the threat of action between China and Taiwan. Should any of these escalate or begin to involve other countries, the fear or anticipation of what this may mean for large countries at war can move the markets. And the fourth item that could disrupt markets this year is the unknown. I'm talking about events we haven't even seen yet. No one started 2020 thinking about COVID, but the markets sure felt it when it came around. And with life, it is unpredictable, and none of us know what big events could be waiting for us around the corner in 2024. So with that being said, and all of the ups and downs and uncertainty still to come in 2024, here are 7 guidelines you can follow to make sure your portfolio makes it out to the other side of this year and beyond. Number 1, embrace the long game. Let's face it, we can't control the headlines, we can't predict political upsets or what international crisis might unfold. But the good news is we can control our investment behavior, and that's where we have to remember that long-term thinking is our best friend. This channel is not in the business of get-rich-quick schemes, it's about building wealth for your future, and that means tuning out the daily market fluctuations. The market will have its ups and downs, it'll throw tantrums, test your patience, and make you question everything. But history is a powerful teacher. Look at any long-term market chart and you'll see a clear trend going generally upwards. We just spoke about the drop from COVID, but today the markets are reaching historical highs. If you had sold then, you would have locked in your losses and missed all of the gains. So, the key is to stay invested, weather the storms, and reap the rewards down the line. Number 2, tame investment impulses. We all have that little voice in our head that this time could be different. The fear of missing out rears its head, making you chase hot stocks based on hype rather than the solid fundamentals, leading us to make risky investments, or the fear that things will never come back and to sell and cut our losses. Again, we can look back to COVID. Understanding that impulse is the enemy of logic is a secret weapon. Once you know to zoom out and look at the long term, you can avoid making irrational choices when things get emotional. Maybe you're prone to panic selling when the market dips. Recognize that urge, take a deep breath, and remind yourself of your long-term plan. Number 3, embrace uncertainty and build a fortress. Here's something we know. Uncertainty is the name of the game. The world throws curveballs, and 2024 is no exception. But instead of panicking, we get proactive. We put a solid investment plan in place, a fortress that can withstand the storms of an unpredictable market. How do we do this? First, consider your risk tolerance. Are you comfortable with a roller coaster ride, or do you prefer a smoother journey? Once you know this, you can allocate your investments accordingly. The mix of stocks, bonds, and other investments is the difference between a risky Bitcoin and a steady Berkshire Hathaway, or maybe a mix of the two. Then define your financial goals. Are you saving for retirement, a dream vacation, or that down payment on a house? Knowing your goals helps you choose the right investment vehicles and set a realistic timeline for achieving them, and you know what you're investing for when the times get tough. Finally, diversify. Don't put all your eggs in one basket. Spread your investments across different asset classes, sectors, and even countries. This way, if one area of the market takes a hit, the others can help cushion the blow. Number 4, stay disciplined and tune out the noise. The market can be a noisy place, filled with clickbait and sensational headlines. Don't let the daily noise hijack your sanity. Focus on what you can control, your asset allocation, how much risk you're comfortable with, and staying disciplined with your investment contributions. Remember, you're in this for the long haul. With a clear head and a plan, you can conquer even the craziest market year. Number 5, knowledge is power. Investing isn't about throwing money at the stock market and hoping for the best. It's about understanding how the market works, different investment strategies, and the potential risks and rewards. The more you educate yourself, the better equipped you'll be to make financial decisions. This channel is one of the ways to get some information, and if you want even more micro learning, which is small bits of knowledge and information on investing, you can take advantage of the 7-day free trial for the Casual Cash Club. Whenever I make an investing decision or portfolio update, I explain what's happening in the market, or the reasons why I have decided to buy this stock or sell this share, or how I'm looking at the value, long-term growth, or passive dividend income in all of the decisions that I make. With each post, you learn a little something new and become a better investor. For example, when the UK market was down, like we said earlier, I understood the situation and took advantage to buy shares in HSBC, and today that is one of my most profitable stocks. I've also been sharing the stocks I'm buying in 2024. This one here is already up by 40% over the last year. So click the link in the description and you get immediate access to all of my posts in the 7-day free trial. And it's free, so why not? Number 6, seek help when needed. Don't be afraid to admit you don't always have all the answers. I'm just a finance enthusiast, but there's a whole world of financial experts who can help you on your investment journey. Lean on people you trust and financial professionals, and they can be your sounding board during uncertain times and offer expert guidance when you need it. And lastly, number 7, celebrate the journey. Guys, in between all of this, the number one thing is to remember to just have fun. It's important to focus on the finish line, but it is equally, if not more important, to enjoy the journey along the way. Investing is a marathon, not a sprint. There will be ups and downs along the way. The market might take a tumble and you might question your strategy, but don't get discouraged. Focus on the progress you're making, no matter how little. Celebrate your wins, big or small, and remember why you started this journey in the first place. Building wealth takes time, discipline, and a healthy dose of patience. By following these guidelines, you can approach investing with confidence, even in the crazy year to come, and with the right knowledge and a solid plan, you can weather any storm, take control of your financial future, and build a better life for yourself and the people you love. And guys, that is it for today's video, and if you enjoyed it, please leave a like and subscribe if you haven't already, and remember to use the 7-day free trial link for the Casual Cash Club in the description if you want to see behind the scenes and my day-to-day investing updates. But until then, I'll see you guys next time. as always, on Casual Cash. Cheers.